You are watching Trading Day on BNN Bloomberg. The first trending trade we've got on deck, Goldman Sachs and another pair of financials lending itself to a bit of a rally here. We had a surprise uptick in profit growth, net income growth at Goldman, and pretty much every division of the bank firing at all cylinders. For a look at this and what's going on with some of the so-called super regionals, let's bring in Bloomberg's Sally Bakewell and David Traynor, founder and CEO of New Construct. Sally, I'll start with you. This is somewhat of a vindication quarter for the CEO of Goldman.
Yeah, that's right. I mean, they're not absolutely taking a victory lap just yet, but after a rocky 2023 where they had to pull back from this flailing consumer strategy and faced a quite persistent deal slump that really led to weakened results, this first quarter is a very sort of strong sign that its reversal of its consumer strategy and its reversion to focusing on its core Wall Street operations of trading, investment banking is beginning to pay off because, as you mentioned, across those operations, it beat estimates on basically all fronts.
It managed to also evade a bit of a slowdown that we saw hit JP Morgan.
Yes, in its trading operations, it did. It obviously has had a good quarter there. JP Morgan, it did beat estimates in its trading business, but it declined year over year, which Goldman has managed to shake off a little bit.
And I guess when you're talking about a situation where we're talking about IPOs coming, you know, the TSX has, or the S&P, I should say, has wobbled, but still, you know, we're near these all-time high levels. These are generally good conditions for an investment bank-focused bank like Goldman.
Yeah, that's right. It is the sort of premier institution when it comes to high finance. And we heard from the executives today who, you know, said that things have been starting to rebound. They're noting sort of more resilient markets, but they did also urge some caution that we do face, you know, continued persistent headwinds. They sort of echoed the comments of other banking CEOs we heard from last week, Jamie Dimon and Jane Fraser, that there are continued persistent inflationary pressures and the geopolitical concerns that sort of all hang like a cloud over the sort of potential for capital markets and investment banking rebounds.
Sally, thanks so much for those insights. That's Sally Bakewell joining us from Bloomberg. Let's bring in David Traynor, who does have a buy on Goldman. And we have seen Goldman shares kind of keep pace with the recovery and the rally that we've seen in the financials. Do you think that the gains can continue?
I do. Goldman has always been the best and the brightest on Wall Street, the most profitable, best cash flow, and I think they're pulling away a little bit. I think, look, having been on Wall Street myself many years ago, I think that in the large part, talent's been watered down, and Goldman's been able to continue to keep the cream of the crop, and I think they'll continue to outperform.
It's interesting you say, always best of the best. I think that was challenged a little bit under David Solomon when it looked like some of his vision and his strategy was clunky. There were some high-profile exits of certain businesses that were core to some new initiatives that he had spearheaded. Questions about whether or not he was vulnerable in his top job. Do you think a quarter like this and kind of the outlook that they gave puts all of that to rest?
I mean, you're always going to be looking closely at what the CEO does. But I think, look, Goldman showed that they could give some retail business a shot, and they pivoted to retail and they pivoted away. And I think that's a sign of an intelligent stewardship and governance. Look, we tried something new. We tried to get into a growth category. Didn't really work out for us, not a fit, and we're out, right? And they didn't take a huge long time to do it. They did it fairly quickly. And I think that's a sign of strength, intelligence for them to have that kind of agility to move around and try different things, but then at the end of the day, get rid of it quickly. So I think it's definitely this is a great quarter for David Solomon. I think it's good that they've got some of this retail stuff in the rearview mirror and they can get back to what they do best.
Let's contrast these results and the reaction perhaps to JP Morgan, which sold off after its set of quarterly results, even though there was some definite strength in there. Do you view that sell-off as a buying opportunity, or do you think it's the start of maybe a bit of a downdraft?
We see it as a buying opportunity. We think JP Morgan is best in breed for the overall bank. Goldman's best investment bank, best Wall Street bank. JP Morgan is the best overall sort of large bank. Great governance, great returns on capital, great cash flows as well. we were bullish going into the call, so we're even more bullish after the pullback.
Let's contrast that with Citi, if we can, which also reported beating expectations. The reaction was a little bit tepid, but unlike JP Morgan, which is seeing some positive follow through, you're still seeing a little bit of selling pressure on Citi. This is something of a turnaround story, so you could argue maybe the upside is higher. How are you looking at a Citi?
You know, I have a little bit of a pet theory that the Fed likes to see one of these big investment banks kind of move on or go away once every 5 or 10 years. And, you know, recently we had Credit Suisse, and before that we've had some others, Lehman Brothers, Bear Stearns, et cetera. I think Citi might be next. I think Citi is—
To go away?
To go away. I think this has just been— it's not a well-run business. And a lot of these investment banks aren't that well run. They're just in a position where they've made so much money for so long, it's hard for them to mess it up. And somehow they find a way, as we've seen with Bear Stearns and Lehman and Credit Suisse. And I think Citi's the next of the big investment banks that we won't have around in probably 5 or 10 years. It's the cheapest. It's the least profitable. And I don't know. I don't know that it really ever completes a turnaround. And I think it's next on the chopping block.
I mean, that's a pretty wild statement. It employs more than 200,000 people. It's over 100 billion market cap. What is it that you think they're kind of— it's one thing to say, you know, the business is struggling. I don't think they have great execution, but there are real people that bank with them, that hold their money with them. What is it that you think they're not doing well, or that they're over leveraged on, that would cause that kind of event?
I mean, these are slow drip kind of burns, right? Where, you know, like for Credit Suisse was struggling forever. And a lot of people predicted Credit Suisse was going to go out of business long before it ever did, because they've been on the inside. They've seen how poorly these businesses are run, and they still make plenty of money. And it's not going to happen overnight. I'm just saying that of all the banks that we're looking at, the major banks, Citi's our least favorite. We think it's the one that if there's going to be another sort of big bank drop out of the picture, I think Citi's the one, and it's just because it's just not a very well-run business, and it's big, and in some ways too big to fail. But look, we saw what happened with Credit Suisse. We've seen what happened with some other firms, Bear Stearns, Lehman Brothers. I don't see any major event that's going to blow Citi up here in the near future. I just think this is the weakest of the big banks.
All right, that's interesting. And I want to locate— I mean, I asked that because we're pretty fresh off of a bank failure, right? About a year out, we did see that. And that was something we hadn't seen on that scale in a very long time. And I guess to take that question and make it a little bit more big picture, we are seeing these bond yields creep up once again. Do you think we could be seeing some sort of event with the regionals?
The smaller ones, maybe there's a few more landmines out there, but I don't think anything major. I think for a lot of the regionals, you're looking at a lot of really underpriced stocks. Zions, for example, is one we like a lot. We think it's really inexpensive, and a stock that's been thrown out with the bathwater of the fear with the other regionals. But I think a lot of the big issues with the regionals has already been flushed out. Nothing major, nothing systemic is going to happen. There may be some small failures here and there, but nothing major. I'm certainly something for people to make headlines about and make a big deal about. But I think at the end of the day, whatever volatility you might see, you know, in the weeks around something like that, will be pretty quickly put in the rearview mirror.
Well, what about an M&T Bank? Are you looking at that? It's clawing its way back, but still not back to where it was before the collapse of Silicon Valley Bank. That sometimes gets put in the category of, you know, the super regionals.
Yeah, I think M&T's got a little bit more commercial real estate exposure than what we'd like to see, especially compared to something like a Zions. But I think it's a solid business and better run than most. So I don't know that our rating on M&T off the top of my head, to be honest with you. But I don't think that that's one we think is in danger. It's not on the top of our list. It's not on the bottom of our list either.